So the Taiwanese index is up around 0.9% right now.
There is also talk, there was one of the announcements made, was integration of Gemini with Android.
And on the way down, the swing low that we saw, which is 46,983, about 47,000 by the way. I mean, that's a number that should not break.
On the other hand, the deletions from this particular list are Berger Paints, Indraprastha Gas, as well as Paytm.
I think the first rates are there. 22,270 is where we are at.
In fact, our prices on an average is little bit better because of the small branding exercise which we have started in the February.
Just outbound travel spend is in the space of $2 trillion.
And on the risk side, it gives me only a high of about 40 to 50 bips on delinquencies.
And what we've got is a very, very range-bound market.
Go Digit General Insurance is all set to become the third company to get listed on the exchanges.
I would say that for India now, probably the Indian elections are having a big impact on the emotion of the market.
Right here in Mumbai, Prime Minister Narendra Modi would be campaigning for the BJP Northeast candidate.
They say 54% believe the impact will be greater or equal to that of the internet.
Here, well, we are at that juncture where Nifty is falling a little bit more.
Okay, well, that's the day so far, and it's a quieter day. It's a consolidation kind of a day, not very much happening at all. Even in terms of individual stocks, I mean, there's nothing wild out there, even compared to what we saw yesterday. It's closing bell here. Next 1 hour of trading action we will cover. We're coming to you from the CNBC-TV18 Motirollsville studios. I'm Prashant, with me my colleagues Reema and Surabhi. Guys, hi, good afternoon.
Hi, good afternoon. Quiet on the index, but there is a lot of activity in the broader markets.
Yeah, and results are coming in, and you know, it's kind of still out. The verdict, I think, is still not out there whether there are more negative surprises compared to upgrades. But it's kind of underwhelming. I mean, broadly, the numbers that we're seeing so far.
Yeah, absolutely. And Prashant, I guess for the headline index, there's just no headway in either direction, right? You're just in that logjam.
Yeah.
And while PSUs are doing well today, and you have a couple of the commodity stocks which are up, doing relatively better off. You've got the entire private sector banking space which is playing spoil sport. Yeah. So something or the other is offsetting the gains today.
No, absolutely, and selling at high levels. That's essentially what we are seeing. So just a couple of points here. So consolidation, correction, whatever you want to call it, but sideways is the word today. Resistance broadly, between 22,300 and 22,400. So there is actually the 40 days around 22,270, so slightly under 22,300. Roughly that's the range. And then there is the 20-day, which is 22,330-ish kind of levels. Bank Nifty is yet to cross the 40-day. And that's largely because of private banks, and that's the weaker of the two indices. Even yesterday, the pullback was weaker. That number is 47,851. So that's the first level, 200 points, just 200 points for the Nifty bank to that. And of course, above that, the 20-day comes in at about 48,162. So, we're waiting for the market to make a move, and we'll see. The good thing is it's not a big reversal or anything of what we saw yesterday. It is some pullback. But we'll see if the market kind of closes like this, or there is something here in the next 1 hour which perhaps happens. Reema.
Well, I'm looking at the broader markets, and the Midcap index is actually doing pretty well. It's higher for the fourth day in a row, and all through the day, it's held on to its gains. So very steady, still up close to about 0.9% on the mid and the small cap index. Week to date, the Midcap index has now seen a rally of 2.3%. Outperforming the frontline index, Nifty, which has gained about 0.7%. Buying in PSUs continues. So in the frontline pack, it's Power Grid, NTPC. Outside of the index, SCI, HPCL. So PSUs are higher once again. On the bank Nifty, it's HDFC Bank which is weighing. Perhaps a disappointment on MSCI, but HDFC Bank is down now 1.6% at the day's low. So that's putting pressure on the Nifty Bank. M&M is higher ahead of results tomorrow. But if you strip out M&M, the rest of the auto pack is sulking. So Eicher Motors, Bajaj Auto, Tata Motors cuts anywhere between 1.5% to 2%.
In the broader market, I'm looking at the entire capital goods space, quite closely, because what this results season has done, it's really invigorated the sentiment around this area. There was ABB and there was Siemens, and both those numbers have gone down well. That's the capital goods index, one of the better performers in today's market action. Siemens itself is holding on to a gain of about 6-7%. And remember, it rallied even in the run-up to the numbers as a rub-off effect on ABB. So this week, which is just 3 trading sessions, Siemens has put on 15% already. That's been the strength of the rally And the numbers are sort of delivering as well. But not just that, I mean, it's rubbing off on a CG Power. Thermax, there's the MSCI index inclusion impact as well. But overall, I mean, even a stock like Thermax is running away 7% on the higher side. There's Hitachi Energy, there is GET&D. So basically, the capital goods space is the one that's really standing tall, and it's been probably the star in terms of the weekly trading action as of now. Another interesting stock, and we'll talk about this as we go on, is LIC. It seems that they are getting a reprieve once again in terms of meeting the minimum public shareholding norms. And that's playing out well on the stock. So they won't have to come in and sell more equity in the market to comply with the MPS. And therefore, that stock is seeing a bit of a relief mood as well. Well, let's quickly get to it and then figure out some of the trades that perhaps one can consider in the last 1 hour. Mitesh Thakkar is with us as always. Mitesh, hi, good afternoon. So indices are super quiet. What do you make of things? And of course, individual stock trades as well.
So I think, I've been waiting the entire day for possibly getting a decisive hourly close below 22, 180, 175 zones. It has not happened. So just hanging on there. Not much on the index, but on the stock side, I think, there's something which could be interesting, and that's where the focus is. Balakrishna Industries is broken out. Buy here the stock of 24.95 for target of 2600. And Tata Consumer is on the sell side, which is looking negative. So keep the stop at 1087, which is just around the day's high, and look for a target of around 1040.
Mitesh, we'll put out a piece with Vamakshi in a bit on the capital goods space. See, ABB is quieter today, but the others, right? Hitachi and Siemens and CG Power, Thermax. CG Power is almost a lakh crore market cap now. Almost, I think, at the day's high. Anything that looks interesting here?
See, actually, Prashant, I've not been tracking all of them. Siemens, yes, and ABB, yes, both I've been lacking, and I'm saying that the long-term charts are still good. But looking at the run-up in the last 2 weeks, difficult to enter afresh. So if somebody's holding out, just hold. For Siemens, trail your stop loss now to about 68.50. And for ABB, I think, trail your stop loss now to about 7,600. And just hold on to your positions.
Okay. Let's invite Gurmeet Chadha on the show now. Gurmeet, what's happening with Colgate? Big fall today. The numbers look good. The margins, I think, are at an all-time high. The company also went on to say that the rural markets are exhibiting some positive signs of a demand recovery. Is it just profit booking, or is there something else that we're missing that's putting pressure on Colgate?
No, I think it ran up with the expectations when results came in for Dabur, for the other FMCG measures. Plus, there was a bit of a re-rating, with change of guard, which happened at the leadership level. I think at the conference call, I think probably the market, they didn't really guide for any very strong numbers. Probably the other managements did, including Britannia and all. I think that there could be a bit of a rub-off there. But nothing concerning as such I found. In fact, as I said, FMCG and both pharma would be, preferred safe havens till the time, this election-related, event-related volatility continues, and Colgate has a very decent dividend yield as well. But we are looking more at ITC, Tata Consumer, buying on dips rather than some of the other names in the portfolio.
Okay, all right. I will just get to that conversation on capital goods with Vamakshi in just a bit. Looking at some of the other stocks on the move, LIC, as I said, is up about 5%. Then remember, today's day when we have, the new IPO also opening on GoDigit. Gurmeet, hi. Good afternoon. I don't know if you have the time to go through some of the details on GoDigit, but we all know why this got high star power, right? This particular IPO that's coming through. But your thoughts, if you've had a look at the issue specifically, otherwise, I mean, whether you would be interested in buying general insurance?
I think the price band of 258 to 270, I think it's a touch lower than what it was quoting in the grey market a couple of months back. I think it was closer to 350, 400, although the GMP is still about 40, 50. A lot of HNI is invested in it because of the star power, as you rightly mentioned. Digital, and this is largely an OFS. So we're not really looking at this right now. I think we are building more position, and not very strictly comparable, but ICICI Lombard, the health portfolio is doing very well. Auto losses are coming down again. So that is something we are looking at, and also we may look at Max with eventually Axis taking ownership in terms of the restructuring happened. There's a lot of senior management they've hired from senior banks, some of the MNC banks as well. So that's something which is on our radar. Go Digit is not on the radar, and PMS has some complications in terms of applying an IPO because you have to the allotment from the pool account. It's a technical thing; it has to happen the same day, and sometimes it gets delayed. So it's easier to do that in an MF. It's slightly technical to do that in the PMS platform.
So that's Go Digit. Since we're on the subject of insurance, I just wanted to get your take on LIC. I guess the fact that they have a 3-year breather in meeting those norms, the minimum public shareholding norms, maybe that's causing some excitement. But fundamentally speaking, would you look at buying this one at all in life insurance?
It came at $500-600 and maybe half of embedded value. Embedded value is nothing but your net asset value and the current value of future profits, because the policies are typically 10-20 years. And LIC still trades at around embedded value. So valuation wise, I don't think so there's much downside here. I would be keen to know the product mix. I think how much mix they are doing with par and non-par. The product mix for them has been pretty skewed. The persistency ratio has been the lowest in the industry. So that's something we would want to see. And the NBP, I think if you see HDFC and SBI Life, the new business premium margins have been upwards of 25%. For LIC, it's still half of what the private peers have. So if we can demonstrate that some bit of improvement, LIC could be a candidate. I think the entire insurance sector post the taxation change in the budget has been a little subdued, whether it is, HDFC Life. I mean, it's probably 30% down from its all-time highs of, I think, 775, if I'm not wrong. So maybe, you probably need one good quarter of solid, new business premium growth and good product mix for a bit of catching up to do. For now, we are good. We're not adding any.
Lots of IPOs coming, Gurmeet. Swiggy is also going to come very soon. They filed for they made the filing. By the way, do you use Swiggy or Zomato? Or you use both?
No, but Prashant, I depending upon wherever I get a good deal. But I'm a Zomato Gold. I'm a Zomato Gold customer. But Prashant, one interesting thing here is that if you see, our screen time is almost 7-8 hours. Most of the the new generation. The e-commerce part, in terms of the purchasing we are doing, is only 5%. I think that will catch up. If you consider it with US, for example, even the purchase is almost 30%. So if your time spent is 30% on the screen, the purchase eventually will also catch up. I'm not saying India will become 30%, it will become 10-15% in due course. And that is why I think all this quick commerce, something like even PB FinTech, Zomatos of the world, I think we eventually do very, very well. My sense is we are more than now willing to pay a convenience, for the services we offer. So in general, I'm very, now turning bullish on especially sectors where, it's become a duopoly or just left with 2-3 players, and the damage in terms of players getting out has already happened.
Okay. I mean, that's an interesting point. I was wondering whether people usually have both apps. You guys have both apps or one app?
Have both. But I think it's a question.
Do you check before purchasing?
No, I think we have pretty hard-pressed schedules. But I think it's a lot of familiarity with the interface. Once you get familiar and comfortable with one, you stick to one.
That's what I thought. That's what I was. You get used to something, the interface, etc. And then you kind of sort of use that, right?
But if you want to dine out, then you'll always check Zomato. Something that Swiggy is, by the way, trying to catch up on. Yeah.
Absolutely.
All right, let's get to chemical stocks then. They're in focus on the back of a UBS note. Sonal joins in with the details. Sonal, hi.
Thank you so much for that. Well, UBS has written on the chemical space and initiated coverage on 4 stocks as well. They, in a note, are trying to say that investors might be ignoring Indian chemical companies' strong niche positions and growth opportunities as well. Right now, yes, the industry is seeing one of the worst global destocking that it has seen in 30 years, but there are signs of modest recovery as well that UBS is seeing. Capex has increased by 4 times in FY16 to FY23 period, and this is something which will help them leverage specific opportunities as well. 2 years of underperformance that the sector has seen could be the start of another leg of improvement for these stocks as well, and that is UBS's opinions, because several indicators suggest modest improvements in volumes as well. So they have initiated coverage on PI Industries with a buy, Naveen Fluorine with a buy, Aarti Industries with a sell, and Gujarat Fluorochemicals with a sell, and the target prices will come up for you on the screen as well, along with the recommendations. They like PI Industries because of strong growth, management track record, less volatile business model, and potential scale up of the pharma vertical. They like Naveen because it's leveraging growth opportunities in agrochemicals, CDMO, and third and fourth gen of refrigerant as well. Aarti Industries, according to them, is yes, expanding their capacity in new chains, but there is greater cyclical dependency and higher debt as well, something that they are not comfortable with. For Gujarat Fluoro, it is exposed to Chinese overcapacity in fluorochemicals, while EV business fundamentals are still at the nascent stage. That's why they're positive on PI and Naveen, but they have a sell rating on both Aarti and Gujarat Fluoro.
Okay, thank you very much for that. Where do you stand on the chemical space and the kind of recovery that could take place?
So, you have to go chemistry-wise, as the report also says. I have a slightly different view on Aarti, in fact, because if you divide the portfolio, they're into benzene and benzene derivatives. If you divide the portfolio into discretionary and non-discretionary, in discretionary, the end applications, which is, dyes, pigments, polymer, they are seeing a bit of a demand recovery. In fact, they have guided for almost 20-25% growth this year and about 15% growth next year. Plus, they have this nitrotoluene capacity which is coming, FY25, which also will add. Then there is a non-discretionary, which is the agro side of it, which I think there is still some pain left. So you have to go very deep here in terms, rather than taking up, a sweeping view or a homogeneous view on the entire sector. So we like Aarti, we like Tata Chemicals largely for valuations. While I think that soda ash and other things will take a little more time in terms of inventory destocking and also the pricing pressure from China. And we are tracking both Naveen as well as Deepak. So these are the four in names. PI anyways been investor for very long, so that I don't look at it on a quarter-to-quarter basis.
Okay, Gurmeet, you want to listen into the next one, this next piece. My colleague Vamakshi is joining in, and what she's doing is basically telling us why is the street so excited about the capital goods space. I mean, if you take a look at what has happened for most of these stocks, from the 11th of May to now, I mean, just 2-3 days, stocks are up anything between 12 to 15%. Vamakshi, take it away.
Well, absolutely. It's been a dream run for most of these capital good counters. In fact, we have a lot of these counters buzzing in the trading session today. Siemens, for example, is abuzz on the back of a strong set of numbers which came in above what we were expecting. The demerger of the energy business also playing an important trigger for the counter as well. For Thermax, it is being included in the MSCI Global Standard Index, which is in turn pushing the stock higher in the trading session today. But another possible trigger could be the NFO, which has come in from HDFC Manufacturing Fund. It closed on May 10th. And in fact, this fund is benchmarked against Nifty India Manufacturing Index, which has a 21% weightage in the capital good index. So overall, when we look at it, the possible deployment of funds could be leading to this upsurge in the counters that we witnessed. But not just today. When we look at this returns on a year-to-date basis, we've seen returns from all of these counters anywhere between 40% to almost 77%. Resultantly, the valuations for these counters have also surged up. In fact, when we compare it to a 2-year average, most of these counters are trading above that average. Resultantly, the consensus target price are much lower as compared to the current market price, implying a negative return potential over the next 12 months, anywhere between 7 to 22.5%. But nevertheless, there's no denying the fact that there are several medium-term as well as long-term triggers that are lined up for all of these counters. Siemens, for example, brokerages say that the company is well prepared to reap the benefits of upcoming Capex cycle, and in fact, the management commentary also highlighted that the private Capex was just beginning to shape up for this counter. In fact, Antique believes that the company could deliver strong revenue growth of 34% CAGR from FY23 to 26, along with margin improvement. ABB, Motilal Oswal believes that the company has posted one of the best return on investments in the capital goods sector, and this counter in turn could benefit from the improved addressable market size and will improve its share of high growth segments as well. Thermax Nuvama believes that the ordering pipeline will be materializing in the coming quarters. It has been weak so far, but it is expected to materialize going into FY25, and the traction is expected to be seen for some of its newly introduced products. CG Power, Nuvama believes that powers and railway will be the twin growth engines for this counter, and another kicker could come in from the semiconductor foray that the company has announced.
Okay. All right, Vamakshi, got that. Thanks very much indeed. A lot of those triggers in there are working well for the stock. What's also working well for another stock is actually the commentary coming in from Bharti Airtel. Flashes on your screen are from the conference call. that is underway, where the management is, one of the points they're making is that they'll be investing more in areas where they're a little weak in terms of market share, and the stock's reacting too well. More on Bharti in just a bit with Reema, but just to complete the conversation on capital goods, Gurmeet, it's been a stellar week, right? Absolutely stellar week. I mean, we're talking 15% on something like a Siemens. ABB was that absolute roaring rally. But then the plate which Makshi put up, we're talking 80 times forward earnings, 100 times forward earnings on an ABB. So for an investor, I mean, is the party already sort of, on its way of getting over? Has the train left the station? What do you do?
No, I think a lot of good news is in the price, and and they've reacted more to order book. And this business is lumpy, Surbhi. You could have also 1 or 2 quarters on commodity inflation, on some poor execution, and that can give you a bit of a knee-jerk reaction. We saw that with a bit of it in L&T when the results came in. The working capital and the margins were a touch lower than what the street thought. I think you have to now go level 2 here. See, one thing is very clear: we are in a Capex cycle. Whether it is ABB numbers, Siemens numbers, Thermax, I mean, I think we are in a clearly Capex cycle, and Capex cycles are long drawn. Now you have to figure out in terms of the, which are the beneficiaries. So that the primer ones are obviously the larger guys, right, which we are speaking about. Then there is cables and wires. Cables again is more B2B, wires is largely B2C and B2B both. Then you have transmission lines, right? And so if you see Siemens business, it's led by, both the smart infra, digital, as well as the energy transmission business. Now in transmission lines, probably power grid is, let's say, it's still 15 times. At 20 rupees EPS, you're still getting it at 310, 320. It's about 16 times, right? So you have to go now level 2. Polycap, we saw great recovery from the lows, sub 4,000 to 6,000. And, they are guiding for, the market share is now 25%. I think what happened is that initially there was, in terms of housing-led Capex, initially there was inventory which was sold. So you had home improvement team doing very well. Now the new inventory is being sold. So, first the civil demand comes up, and then this electrification and the housing building material demands comes up with a lag. So I'll be betting more on building material and second order impact of infra spending, and that coming with a lag, and then playing the level 2 story. That's how we are trying to position in the portfolio.
Okay. Gurmeet, just, before we let you go, I just wanted to ask if you've seen TBO Tech, if you had a chance to look at this company. Stellar listing today. 50% gain. I'm talking about today's listing, TBO Tech.
No.
In case you saw it.
Unfortunately, most of the good ones you have been missing out of late. So that's why I haven't really come.
No worries.
What about Bharti Hexacom? Well, you can't participate in an IPO before it lists, but once it lists, it's open to you. So Bharti Hexacom listed about a month back, and it's a mobile service player in Rajasthan and Northeast. Numbers look pretty steady, right? 4% quarter on quarter, 7-8% on a year-on-year basis. But the stock has done very well. From an issue price of 570, it's now at 900 rupee plus. Jefferies is still bullish. Their target price is 1200. But where do you stand on Bharti Hexacom?
No, so I think, as I said, again, in this case, probably near-term catch-up has already happened in terms of good news around it. Again, very keen on it on the long term. It's not strictly comparable. We are adding more Tejas networks. We believe that, this digital infra story would be the next big one. Jio is not listed, the largest telecom player it's still not valued the way it should be, largely because of the capital allocation to Africa. And this quarter also, Africa pulled it down. Otherwise, the core business continues to do well. So we have Bharti, we have Tejas in the portfolio. We're trying to see if we can look at even Tata Communications with the kind of numbers they are giving for next 2-3 years. So our focus is on, this entire digital infra. I think this is where probably now the time has come where you'll start seeing more cash flows. Bulk of the Capex, balance sheet deleveraging and all will also play out. So both financial operating leverage, will be visible in this.
Okay, all right. We leave it there, Gurmeet. Thank you very much for joining us. Always a pleasure. Good chat. And we'll speak with you soon again. I think the market is thanda today, right? I mean, 5 points, at least on the Nifty. So 22,220 is where we're at. So almost unchanged. Some flashes from Bharti conference call coming through. We'll sort of keep putting out the most important stuff which is coming through.
I think we can actually cut to the call right now.
Let's cut across, listen into what is being said.
And this is really the heart of the problem that we have today. Our pricing and tariffs are at an absurdly low level relative to any other part of the world. So tariff repair is sorely needed for return ratios to improve. frankly, doesn't matter which technology it comes from. The fact, however, is that 5G is a more future-proof technology. So to that extent, it's just about advancing Capex that would anywhere happen. As far as the overall Capex is concerned, we've always mentioned that FY24 will be a elevated and peak level of Capex, and I expect to see clear moderation going into FY25. As far as the industry structure is concerned, I'm glad to see that VI has raised money, and I really wish them well. I think India will be well served if it has three private operators working there. Whether we need to push harder, we are pushing hard every day. So this is an ongoing effort. It's always been a brutally competitive marketplace ever since I've been around and ever since the company has been around. So, ups and downs keep happening. It's a volatile market sometimes, but you just need to be at the top of your game in terms of execution for you to continue to deliver sustained performance.
Thank you for those responses. A follow-up to your tariff repair comment, right? And you called out that, let's say, today you're closer to 10% return on capital. And for that to, let's say, meaningfully improve, there probably needs to be multiple large tariff hikes, right? So, how do you think about the path to that? I mean, do you think you would prefer to do multiple smaller tariff hikes over a period of time, or let's say one or two large tariff hikes? And what really needs to happen for that eventuality to really play out in the next, let's say, 6, 12, 18 months?
I think that, we have done what we could. We have moved up the entry-level tariffs on feature phones. We have tried to sort of drive all the levers of ARPU upgradation across the multiple levers that we have using lots of digital analytics. But at the end of the day, it is a competitive market. And, repair will need to happen across the industry. It's, just us doing it. We could do it, we could lead it, we could start it. But the fact is that if there is no, if competition doesn't follow, then it will hurt us. And that's a challenge. So we just have to wait and see when the time is right. My own sense is that you will need substantial repair in the industry. We're already at just over 200 rupees ARPU. I think the right level of ARPU, even at 300 rupees, would still be one of the lowest in the world. So there is substantial repair to be had in the industry. Now, how that happens, I think I can't sort of guess, but we'll see how it plays out.
I'm going to try this in one more time. So in terms of ARPU, do you think closer to 250? I think in one of the interviews, I think Mr. Mittal had mentioned closer to 250 by next year. Is that possible, or you think still too many moving parts to really say something concrete?
I wouldn't comment on a specific milestone. I think all I'll say is that repair is sorely needed in the industry. I think all the players need it. So it's not just one player or the other.
Okay, that's the Bharti Airtel investor call, firmly reiterating that tariff repair is needed. He's not saying by how much or when it will take place, but he reiterates that tariffs in India are at an absurdly low level. At these levels of tariff, they're hardly making any return on capital, just about 10%, and tariffs need to go up. So, very clear that, the tariffs need to go up. The other important takeaway is that FY24 was peak Capex for them, and from here on, Capex will come down, which means the amount of cash that the company generates will go up, which is also positive. So as one of the analysts was earlier pointing out, that in FY25, there are two potential big triggers for the company. One, if a tariff hike takes place, it largely flows through directly into the EBITDA. So EBITDA goes up. Secondly, because Capex spend will come down. The company has largely finished its pan-India 5G Capex. So the amount that it spends on Capex comes down. Again, that's positive for the free cash flow and EBITDA. And the third one will be on AGR and the judgment that's awaited there. The stock is inching up. But that's Bharti Airtel for you. We'll slip into a very short break. On the other side, we'll be joined by Sanjay Parekh, founder and CIO at Soham Asset Managers. Stay tuned.
Okay, welcome back. That headline from Bharti, of course, is on tariffs and, much awaited. Everybody's waiting. It's kind of, and when everybody's, I mean, Rima, you would not notice, how much you pay, by the way? You don't know. I can bet you don't know.
I do know. I know to the last digit.
How much? Tell me.
589.
Point what?
00.
All right, I'm going to check and come back whether that is an accurate number or not. But I think the point is, since it is so widely advertised and expected, how much of this is in the price? I think that is the other question, right? I mean, if you know it's going to happen in a month and a half, 2 months' time, are people already sort of betting? And of course, there'll be, I think, a reaction once it actually happens, because it's been people have been waiting for a long time. So there is that element as well. So let's ask someone who's kind of sort of also tracked this space, who's I think owned some of these stocks earlier. Sanjay Parekh is founder and CIO at Soham Asset Managers. Sanjay, great to have you with us here. Good afternoon. Thank you very much for your time. I mean, you heard the Bharti management there saying the tariff levels in India are at absurdly low levels. Substantial repair in tariffs is needed. So kind of giving credence to this expectation that, there are substantial revisions coming very soon. Your thoughts and, would stocks do well once this actually comes through? I mean, the two listed pure play telecom names, Bharti and Idea.
Yeah, so on Bharti, clearly structurally, they're absolutely a top-class management. Top-class execution. They're gaining market share. They are focusing on quality customers. As they stated, the Capex is going to taper down, and they would be towards free cash flow generation. And of course, you need tariff hikes. Now, obviously, there'll be overall ARPUs will go up because of the mix going better. And of course, as they move also to postpaid, and within that, they also have further quality customers, and then there's a tariff increase. So it will be a combination of all of them, and then they're absolutely navigating it very, very well. And consolidation is here. I mean, you still would have three players: Vodafone, Idea, and Bharti and Reliance. There is enough scope for them to move up in terms of growth on a 3 to 5 year basis, and definitely they were right. They're clearly leaders. So that's where we are very positive. We own it. Having said that, as you also said, it's run up. They could consolidate. It's not as cheap now if you look from a near-term angle. But again, if you look from a 3 to 5 year angle, or even if you look at 26, 27, what will happen is, today they were not generating meaningful free cash flow. But if you take cash profit on India and then reduce the Capex, which is maybe 25,000 crores, the free cash generation will really be high getting into 26 and 27. And that's where, you look towards these companies on FCF yield, they look reasonable. So the longer term, we are very positive. Near term, I think it will consolidate.
I can see you're overweight on telecom in the India Opportunities Fund too. Sanjay, hi. Your fact sheet as of 31st of March shows the cash holding is 4.5%. As of 30th of April, the cash holding has gone up to 7.5%.
Yes.
You've turned cautious on the markets, upping your cash levels. What does it stand at now? And what is it that you were anticipating when you decided to increase the cash balance?
Yeah, so we actually valuations, discomfort on valuation, profit booking in our holding as well, trimming down where we thought there were excesses has led to that. In fact, our cash has further gone up to 9%. But structurally, we are very positive, and we believe that there will be continuity of the current government. We don't know the exact numbers, but we broadly are at least, whatever elementary checks we have is that there will be a continuity, which will augur very well for, equities. So, but having said that, value even in larger caps is limited in selective pockets if you take from a 12-month angle. So that's where we think that it's better to trim down and increase the cash holdings. That's our stand.
And where is it that you've reduced your holding to increase this cash level?
Sorry?
No, I'm saying where is it that you've, booked profits?
Yes. So we book profits in certain segments in utilities. In our core holdings also, when the weight was very high, we thought that, there is some money. I mean, values in certain cases, the prices are far ahead of values for 26 as well. So, while we don't trade in and trade out, but it always makes sense to trim down your exposure. So in case there is any reaction, or if there are better opportunities, you can always redeploy to better, in terms of better opportunity. That's what we have done.
Pretty interesting, Sanjay. Interesting thought process there. Now, where does capital goods fit into your scheme of things in this context? The reason I ask is that it's a sizable exposure for you. It's an overweight compared to the benchmark index, and of course, right now you'll be feeling absolutely delighted with the way these capital goods stocks are behaving, right? But what do you make of things? I mean, these are historic margins that some of these companies like Siemens, ABB that they've delivered. Do you see this sustaining? Because by nature, it's very lumpy. I mean, tomorrow, if there's a bad quarter, then are these stocks susceptible to a sharp sell-off because of the rally?
Yeah, so you're right. So basically, as you mentioned just some time back in terms of valuation, so we are very cognizant of valuation. I mean, they're great businesses, but you will have to buy them at great price. So overall portfolio price earning of our overall portfolio is 15 times on 26 for growth rate of 20%. And that we are very conscious of not overpaying for a great company. So these companies like Siemens and ABB, yes, they're great companies, and yes, we miss them buying way down, but we would not want to chase at current level. Having said that, we genuinely believe the opportunity is very, very large. The entire domestic theme, so capital goods, cement, you can play through logistics, which we have done through ports. Cement can be a proxy. Capital goods directly, also we have Larsen & Toubro and one of the companies in solar space and one of them in EPC space, which is very high quality in terms of ROEs. So we've invested where we thought it was reasonable, and we like the opportunity. Even in the current government, which comes ahead, the first thing they'll do is, again, accelerate the infrastructure space, because that would mean economic development, employment generation, and growth. So it's very logical to happen, and wherever companies are rightly positioned, we will be there, and we are further looking to accelerate if we get a right valuation.
No, absolutely. Sanjay, Sola Wilson is what you're referring to. That's a recent addition, or you've owned it for a while?
Yes. No, we bought it, Prashant, 3 months back, and it's significantly run up almost 60-70% for us. So we're holding it because the opportunity is very large. They've come out of the debt problems.
Yeah.
They're almost now sitting on net cash. They have delivered good fourth quarter, but the best could be in 25 and 26. Having said that, it's run up too fast, and I would suggest
what a P is at, Sanjay? FY 25-26?
Right. So I'll tell you broadly, they'll do an EBITDA of around 500 to 550 crores. But now the market cap is pretty significantly gone up at 19,000 crores. And then the only good point is in this company is it's come out of the crisis. It is sitting on good order book. The opportunity is very large. The parent now, Reliance support is very important from a debt angle, the comfort to the lenders. And even if they execute seamlessly, it's a negative working capital company. There's no Capex requirement. So you just have to execute it right, profitably, at 7 to 10% margins where you get your orders from. And it could be meaningful turnaround and high returns. That's the outlook we have. As I said, having said that, it's run up too fast, and I think it's now not cheap. That's our view. But we'll hold on as a core holding for us.
No, absolutely. Sanjay, great conversation as always. Thank you very much for your time, and appreciate it very much here. So that's Sola Wilson. As Sanjay said, Reliance, of course, is a significant shareholder in the company, and the support through some of them, Sterling and Sola Wilson kind of repaying the debt and coming through all of that has been critical. That backstop has been critical. We'll take a quick commercial break here. We'll come back D Street Chatter with Nimesh. I think Nimesh is with us, so we can go across to him. Nimesh, what are you picking up?
I know, Prashant. So a depth consolidation and not a bad outcome, so to speak, despite the fact that there's so much of FI selling happening in the cash market in the last many days, and today seems to be no different. So again, it's a mixed day from a flow perspective, but there are selling pressure from larger FIs. That's the broad feedback. But there are a lot of individual names in the broader market which are outperforming. So the mid-cap index is outperformed, but a lot of capital goods stocks, a lot of the PSU names are doing good in today's market. Maybe one explanation for the capital goods to do well is the fact that maybe the deployment from the new NFO has started in that space, and hence you're seeing a bit of outperformance in those names in today's market. For the last few days, we've been talking about the downside support of 21,800 as a very strong support on the Nifty. Now, maybe after the last few days of rally, on the higher side, 22,300, 350, or maybe 22,400 is a level to watch as a bit of a resistance on the Nifty. So that's a level to look on the upside. But from a flow perspective, again, it's a mixed day. But the FI selling seems to be pretty much on even in today's market.
Okay, all right. Nimesh, what about individual stocks? What's the chatter like today?
Well, the first stock on my list today is Aadhar Housing. The today's fresh listing it actually opened flat in today's market, but then the volumes have picked up. Nearly 50-60% is marked for delivery. The last one I checked, and I understand some large HN investors have been active buyer in the market today in that particular name. So that's the first stock, Aadhar Housing. The second stock is LIC Housing Finance. For the last couple of days, there is delivery-based buying happening in that stock as well. I understand a leading long-only fund is an active buyer, and hence high deliveries mark on that stock. The results are tomorrow, so watch out for that in LIC Housing Finance. Third name is GAIL. Again, the PSU basket seems to be seeing a bit of selective buying, and GAIL stands out today on back of fresh buying interest. So again, high delivery volumes are expected in GAIL as well in today's market. And the last is Swan Energy. It's been quite volatile in the last month or so. From the recent lows, the stock has bounced back nearly 10%. The delivery volumes have picked up as well. I understand a leading domestic mutual fund has been a buyer, and they've added further into Swan in the last couple of days.
Okay, well, Swan, of course, again, another big turnaround, right? And big outperformer as well through the course of 2024. Nimesh, thank you very much for that. Well, let's just quickly go across now to, I think we'll take a break here. We'll come back with short-term trading ideas. Mayday should be back with us. Stay with us.
Welcome back. So there's some red on the screen now, 12 points lower on the Nifty. So as usual, extremely volatile, narrow band, but now struggling around 22,200. That's the market. Look at that graph, really something today. Mitesh is back with us. Mitesh, so bulls not making any headway. Final advice, final trades for today then?
Yeah. So I think, the index has ended very flat and not much has happened. So not taking any trade on the index, that's one part of the advice. But on the stock side, Bharat Forge can be a good BTST. Keep the stop at about 1450. Look for a target of around 1480 for tomorrow. And the other stock which I like is on the negative side, and that's Tata Motors. And it's been falling since that numbers were announced and we saw that gap down and then big bar. Yesterday was consolidation, today is seeing continuation. So STVT here with a stop at 956 for a target of 930.
Okay. Thank you, Mitesh, for that. Those were a few BTST calls. Let's move on and talk about Aadhar Housing Finance. Day one on Dalal Street, a bit muted. This is a low-cost housing finance provider, much larger than peers, with an AUM of about 19,000 crore rupees. But the stock, if we could just pull that up, as we said, fairly insipid. Abhishek joins in with details on how the stock fares compared to peers.
Well, it's a tepid listing to the IPO of Aadhar Housing. As you mentioned, they have listed around 315 rupees per share. The issue price was around 315 per share. Now, at CMP, the stock trades at about a price to book value of 2.6, 2.7 times with respect to post IPO book value that you take into account after 9 months PAT itself. So, valuation is still cheapest amongst peers. Peers are available anywhere between 3x to 4.5x like Aavas, Aptus, as well as Home First Finance. Now, promoter will hold about 76.5% post the IPO. They had earlier 98.7%. So, AUM growth is weaker than peers. If you take a look over the last 3 years, they have grown anywhere in the range of 10% to 20% coming into the IPO. However, housing finance has been a good theme, and other peers have grown robustly at 25 to 45% range as well. So, HFCs have actually now started focusing on the luxury side of the apartments or the higher ticket size loans with respect to financing that is being done by housing finance companies. While actually this company is actually still focusing on affordable housing, which is not attractive anymore with respect to the returns that the companies or lenders are making. Back to you.
Okay, all right, Abhishek, thanks very much for that. That is Aadhar Housing, a little more lukewarm compared to the other listing of the day, which is TBO Tech. Well, let's welcome in Amrish Baliga into the conversation now. Amrish, hi, good afternoon. Good to have you on the show. So let me start with the new listings in case you have any views. Aadhar, Abhishek was just talking about, and then there's TBO Tech, a company that is in the travel solutions space. And right. It's been a real bumper listing. And I was listening to the interview that Prashant was having earlier with them in the morning. And TBO Tech identifies the entire global travel market as their addressable market. So just some thoughts in case you've seen it or tracked it.
As far as Aadhar is concerned, yes, I don't think people are too excited about the business. Although the margins are higher, but then at the same time, the sort of volumes which can happen in luxury, housing doesn't really happen at the lower end. They are very small ticket sizes. But then I think from a valuation perspective, it's decent. So I think if one looks at slightly longer term, maybe a year or two of holding, I think it's still worthwhile buying at the current levels. And as far as TBO is concerned, I think that's a great space currently. Most of the companies in that space, like the travel space, are doing extremely well. And here we have a company which is actually global. So from that point of view, I think there's still a decent upside. So TBO, I would say, if there's any correction because of the market, I think it's an opportunity to buy.
Okay. Amrish, talk about your pick now. Let's talk about Sona BLW. Why do you like it, and what's the play here?
Basically, it's a leading automotive technologies play which designs, develops, and manufactures highly engineered automotive systems and components. About 76 OEM customers across India, Europe, US, China, in both electrified as well as non-electrified powertrain segments. And they have about 9 state-of-the-art facilities across India, US, Mexico, and China. About 32% of their revenue, if you look at the Q4 revenue, about 32% of that, was from EV supplies, 22% is from hybrid. So basically, the company is future ready. It's a de-risk model. If you look at the Q4 revenues, they grew by about 19%, EBITDA grew by about 23%, PAT by about 20% Y-on-Y. And gross margins also expanded. They expanded by about 210 basis points to about 56%. And if you look at the EBITDA margins, they are decently high at 28%. Extremely strong order book position, about 22,600 crores, and out of which 79% is EV related. So it's among one of the fastest growing auto ancillary companies with an expected PAT CAGR of 25% over the next 3 years. And with a FY26 EPS of about 15, which I'm expecting, I have a target of 675. And this stock has actually corrected from those levels in the recent past. So I think it's an extremely good level to start buying.
Stay on. Ambrish, need to get into a very short break. We'll come back and continue our conversation. Welcome back. M&M is moving well ahead of numbers tomorrow. So M&M, just pull that stock up for you. It's higher by close to about 1.5%, extending its year-to-date rally to close to about 33%. Ambrish, any thoughts on Mahindra and Mahindra?
In fact, I've been bullish on Mahindra & Mahindra for a while, but then now, I mean, unless the numbers are extremely good, I mean, even going ahead, I don't really see a huge move from here. I think it should consolidate, stabilize at these levels.
Okay, that's a view on Mahindra and Mahindra. Ambrish, hi. So what did you make of Colgate and the sharp sell-off that the stock is seeing? Because, I mean, optically, the numbers looked absolutely fine. Margins are actually quite healthy. The company is also sounding optimistic on rural recovery. So then what was the problem, you think, today?
No, I suppose, I mean, the way the stock has performed, possibly in the last 6 months, I mean, it was closer to those levels of about 2,000. It was consolidating, I mean, in that region. From there, we had an extremely good move. So possibly, I mean, it was buy on expectations and sell on news because, I mean, with the sort of results, if you look at it standalone, there's not much of a reason for the sell-off. But then I suppose people have just booked profits. But then I think it's a buying opportunity in case we see levels of closer to about 2,400, 2,425.
Brish, do you track a company called GR Infra? The IPO came through. It was a large company, actually. And,
yes, that's
yeah.
Track it very close.
I mean, oh, you do? Oh, any thoughts? It's doing well today, but from the time of listing, not done very well. Sorry, you don't track it. I heard you track it very closely. All right. I think it's Wednesday, right? Not Friday.
It's okay. There's some digital technology issues can always creep up. But I'm looking at some other stocks that are catching the eye because, it's all about the mid-cap market today. That's where the buoyancy is. Look at Brigade Enterprises. It's pushing almost an 8.5% gain right now. There is SKF, which is up 7%. Sundaram Fasteners from the auto ancillary space comes in. Industrials and auto ancillary. 5.5% up here. So Triveni Turbine, lots of interesting stocks. KC International, again from the Capex / industrial goods engineering space. Lots of such names which are popping up on the screen. Amrish, we were discussing the large capital goods stocks even earlier on the show. The ABB and the Siemens of the world and the way the market's rewarding them. Now, how would you play the whole chain? Maybe there's one area which is large capital goods, and there could be power transmission. What would be, let's say, your top Capex picks?
No, it'll be across, because if you look at the sort of Capex which is happening in that space, the visibility for these companies is possibly 4 or 5 years or even more than that. So looking at that, that sort of visibility, there's clear demand. In the market for these stocks. So I would surely look at stocks like ABB, Siemens, BHEL. Although it's moved up decently well, still, even at these levels, I think BHEL is still worthwhile for a further move. A stock like L&T, we've seen a decent correction. I think it's a buying opportunity. KEC, with the sort of numbers which you've seen, I think we should see still, upside. A decent upside for KEC. So these are the stocks should be bought.
Linde India, Amrish, any thoughts here?
Which one?
Linde India.
No, Linde, I don't track it closely, so it's difficult for me to really comment on that.
Okay. We were just having Sanjay Parekh was with us. He was talking about, he owns Sterling Wilson. Do you track this one? It's Reliance owns a significant chunk of the company. And of course, it's now, I think today it's come back to its previous all-time high. Go on.
Yeah, in fact, looking at the sort of focus which Reliance Group has on solar energy, and I think one of the reasons why they picked up this company, clearly I think the order book for this company should not be an issue even going ahead. So I think at every dip, this is a buy.
Okay, the dips are hard to come by. That's the only thing. Stocks are doing well, and it's done phenomenally well. It did give a sort of big swoon a couple of months back, but it's kind of quickly come back up very, very fast once again. I think we're going to start wrapping up things here. Amrish, thank you very much for your time. Appreciate it as always. So Amrish Baliga there with his perspective. Of course, his stock for the day is Sona BLW, and he put that out and lay out the reasoning as well. We're going to end absolutely flat. So this is almost an unchanged kind of a day, 22,200. Bank Nifty seeing a bit more damage, about 0.35, 0.4%. But the broader market just doing very, very well with a long list of, gainers. So yesterday it was PSUs and metals. Today it is capital goods, which is the sector of the day by far. But it's not just that. Real estate names like Sobha, Brigade, and so many others which participated in the upside. Prima.
PSUs continue to see buying. The PSC index up 1.8%. In that, PSU Banks rallying 1.5% at a time when the Nifty Bank was down close to about 150 points. The top gainers include Coal India, BPCL, NTPC, Power Grid in the PSU pack. Bharti Airtel, as the management reiterates that there is a need for tariff hikes from here on, not one, perhaps more than one. 2.5% up on Bharti Airtel. M&M sees buying. L&T higher for the second day in a row, and L&T is quietly crept up 4.5% this week. On the way down, autos like Bajaj Auto, Tata Motors see a cut of close to about 2%. Asian Paints, Tata Consumer, Britannia, HUL. So consumption too on the back foot.
Absolutely. On the broader market screen, of course, it was more about capital goods, Capex. These were the stocks that were doing really well. So to start off with, as we've been pointing out, Linde India, Thermax, these were the big names. Hitachi Energy, almost 10% higher now on Hitachi Energy. More names like GET&D, a 5% circuit going on that one. So big moves coming in. KC International from the power space. Also up and about. The other interesting names included a Brigade. Last minute rally on Brigade, 9% of a gain coming in over there. By the way, I forgot to mention CG Power on the capital goods rally. Thermax and CG Power, all these stocks had a good run. So did LIC, by the way. not often that we see a 7% surge on LIC, but that was the day. Of course, it has gotten a reprieve from meeting the minimum public shareholding norms for another 3 years now. So that worked well for the stock. So these were some of the major movers and shakers. On the way down, Colgate was the big one in terms of a negative reaction to earnings, 5% down there. And specialty restaurants perhaps also on the losing side. All in all, of course, a much better day. Today's listings, actually, let's end with that. Aadhar Housing, 5.5% up. And TBO Tech was the big star from the travel and tourism space, up 52%. So all in all, a pretty good day for the mid-cap market, not so much for the Nifty.
All right. That gets us to a close on this edition of Closing Bell from all of us here. It's goodbye. Thank you very much for staying with us. But we continue here as we get you markets forward in just a bit from now.